Welcome everybody. We're still here after a wonderful conference at the Public Accountants and Auditors Board Conference, and we're here with good friend Hussein, one of the smartest accountants in the country. Back in the day, he won the Duff Award for the best student in the Chartered Accountancy Board exams. So we're very happy to have him. He's now a senior regulator as well as practitioner in the accounting and auditing space. And we get to interrogate him about the gibberish that we call inflation adjusted accounts. Very happy to have you, Lewis. Thank you so much for doing this.
Thank you very much, Rufaro. In terms of the two hats that I wear, I'm a practitioner. I'm an audit partner with PKF Chartered Accountants. I spend my day auditing. Then, as part of my corporate social responsibility, I am chair of the Zimbabwe Accounting Practices Board, which is the standard-setting arm of the Public Accountants and Auditors Board.
You actually enjoy being counting?
I enjoy being counting, definitely. It pays the bills.
Are you a masochist or sort?
No.
No, he's a numbers guy. He's a legitimate numbers guy. And so I want to start off with an area that I'm passionate about. That's probably going to have a big impact on accounting, which is AI. Accounting is a very rules-based, logic-based language, way of presenting what's happening in a business, which is amenable to computers, understanding and, putting things together. So in the context of, all the noise that we hear about how AI is getting better and better and better all the time, and it's going to change everything.
So you were asking me if I actually enjoy it. You'll find why it becomes unenjoyable is when people make mistakes. So with AI, and like you're rightly pointing out, Rufaro, with AI, the rules-based approach of the accounting side fits in very well with AI. So in my mind, I see AI producing less errors. Some of the errors that we're finding are basic bookkeeping errors. Now with AI automation, once an invoice is done, it can be quickly, correctly captured and allocated within the financial statements. As much as people have a concern that AI will replace accountants, I believe there will always be the room for judgment. So where the rules are not clear, where the lines are not very clear, you need professional judgment. So I'm excited for the impact of AI.
So bringing it to Zimbabwe, especially on this issue of judgment, there is an issue that is very pertinent in our marketplace at the moment. And this is where the Reserve Bank came out in the last monetary policy statement and clearly stated and insisted that all reporting shall now be in ZiG. And we all know that, ZiG is about 20% of our trades, but the underlying market fundamentals are that we're trading in US dollars. And the market, clearly we need to push back, but I hear and I understand that there've been back and forth between yourself and the regulator. Could you just give us a synopsis, an idea of where we are at the moment?
Okay. So I think when the monetary policy statement was announced, we were already in discussion with the Reserve Bank in terms of matters related to auditing and accounting. The pronouncement in itself was a bit of a surprise to the accounting profession, because within the standards that we use, there is recognition that business entities will operate with what is called a functional currency, which is the currency that predominantly affects how they conduct their business. how they make their decisions. So when that announcement came to say everyone must now use ZiG as the reporting currency, it kind of caught everyone off guard. But we continue to engage with the Reserve Bank, and one of the things we understood from them was that the Reserve Bank wants to take the country back on a mono currency, and in their judgment, this was one of the cocktail of measures that would bring us back to the mono currency. But when we spoke to them, we then put across a scenario where there is a cost to compliance. Everyone has audits don't happen overnight. 24 there's planning, there's risk assessments, there's a whole number of things. So for someone to then come in after the event and say, do this, the audit was already started in US dollars. The risk assessments were done in US dollars. So to come in with a measure at the end of a reporting season was a bit of a problem for the profession. And fortunately enough, through engagement, they then took this into consideration. And as a starting point, any entity that is regulated either by the Reserve Bank, by IPEC, by SECZIM, Zimbabwe Stock Exchange, those companies, if your functional currency was not ZiG and you'd already done your numbers in US dollars, they were then amenable to receiving those regulatory financial statements in the form of a translated balance sheet, a translated income statement, translated cash flow, using the Reserve Bank rates. This was part of the concession.
But is that true of this year? And would that be true of the future?
I think it's hard to tell in terms of the future, but certainly in terms of this year. And what you'll also find is various preparers in the market would have been at various stages. So the announcement for some was a non-event because they had already started preparing to produce both US dollar accounts and Zim dollar accounts. Those ones that were only focused on US dollar accounts were the ones that were caught flat-footed. And this concession actually gave them some reprieve.
And is the reprieve for this coming year or up to 2026, or what's going to happen? Or are we just going to go into the cycles where every year we have to sit with our RBZ?
As an accounting standard setter, what we do is we set standards for events that are pertaining, that are obtaining at a point in time. So it's hard for me to say will all the circumstances.
I love that you're in the business of setting the standards, and have so now that I know you're a regulator, I can reach out to you with all my pet peeves. So I'm a capital markets analyst, and one of my pet peeves is that you have all these listed or public companies that have a board and management team, right? That is running these businesses and making decisions, and they use the best quality information at their disposal to make decisions, right? And as an analyst, by the time they report their financials and they end up in my inbox, they have done all these adjustments and changes, and they in this format called inflation adjusted accounts that is almost useless to me. And it's just an absolute nightmare trying to do a good job analyzing those financials and determining what's happening within the business. And one of my peeve and where you guys have disappointed us as regulators is that I think that the standard should then have said that in addition to the inflation adjusted numbers, which we all struggle to analyze. I don't think anybody actually tries to analyze inflation adjusted numbers, right? We know that you, as your board and management, have figured out how to generate quality numbers. Whether if your functional currency is in US dollars, then you just have these US dollar management accounts that you use to make decisions. And you've got all these other tools that is in local currency to or you're this quarter. If the decision making really different, implement their public accounts with that information, so that I, as an analyst, and my colleagues in the capital markets, we also, have access to the quality information that they are using to make decisions. Because as it stands, we're using really degraded information. And it's bad for our capital markets, because what it means to a guy sitting in London or Joburg or New York who's trading across Africa's stock markets, he's going to look at these Zim numbers and say, hey, you know what, it's too hard, okay? It's just so much easier for me to understand Zambu in Zambia than it is to understand Delta's inflation-adjusted numbers. I'm not going to try, so I'm not even going to think about buying this stock. So there's just a lot of capital that's never going to come through to Zim. And even for me to recommend to you or any of my friends, look, I think you should be buying this or selling that, it just makes my life so much harder.
Okay. I think the question you raise, I'll start by saying IFRS, International Financial Reporting Standards, are a principle-based reporting framework. They're not rules-based. They are rules, yes, but the principles are, we are seeking fair presentation of what. So, as a set of rules, you can then get an absurd outcome. One of the principles within IFRS is it says, as much as a standard will require the following, if there is any decision useful information that you as a preparer of those accounts are preparing, that you have, you can share it with the user of those accounts. So there is potential that preparers are not sharing as much decision useful information out of their board packs, out of their management accounts, etc. The other thing with IFRS, it is meant to be a general purpose financial reporting framework, right? The users, the primary users, or rather the preparers of the financial statements, are in a very privileged position. They have front row access to every invoice, every expense as it takes place, such that they know exactly what has transpired. And when they've applied the financial reporting standards and the answer they're getting is different, they need to sit back and say, are we correctly applying the standards? On the back of this conference, one of the questions that's been asked is, are people who are using ZiG as their functional currency, is it really their functional currency? If it is, then what the standard is saying, historical cost ZiG accounts are meaningless. You need to move away from historical cost ZiG accounts, and in its place there is IS 29, which will provide you more meaningful information. It's not as meaningful as you'd want, but it's a lot more meaningful than if all companies were just presenting historical cost financial information. The pressure over the past years has been, there are lots of audit qualifications in these financial statements. They're now meaningless, right? But that's, I think we threw out the baby with the bathwater with that kind of thinking, because the reality is you have to look at each qualification. What does it speak to? If the qualification is speaking to a country-specific issue that is outside the control of those charged with governance, don't put a negative mark on that entity as an analyst, right? But if the qualification is talking about breakdown of controls, non-compliance with laws and regulations, pay attention to that and give them a negative mark for that. But we kind of generalized, and we then got to a situation where we're now saying IS 29 does not work. The other assumption within IS 29 is it requires market information. So CPIs that are market related, exchange rates that are market related.
Well, Zimbabwe CPI annual CPI is a state secret.
Everything is distorted. Okay, but
so when those inputs are not available, it becomes hard to apply the standard, and that's the scenario you find. But certainly in terms of getting around it, you find a number of entities have reassessed their functional currency and have not had to deal with IAS 29. I hope in your analysis you're picking up.
Yeah, look, there's some good actors, like Delta, who voluntarily decided they're going to share their US dollar numbers with us. But you'll still find, many listed companies that have no supplementary US dollar numbers.
And they're literally hiding behind the ZIG numbers because we all know that they're gibberish. So they hide behind those, and then we can't really analyze.
Any set of general purpose financial statements, I think, must also tell a story about what is your business model.
Yeah.
And if your accounts, as you have drafted them, are not telling that story, as a preparer, I would expect you to go that extra step to say, what is my core business? Volumes of this product, kilograms of product X. Report to us those those kilograms. How are you training?
Unfortunately, the producers jumping up and down. I think we could easily do an hour or more.
Just one last question, because it's a pertinent one. It has to do with the international audit firms that are moving out of Zim. Could you just give us an analysis of why they're doing so and what you think the issues are? Or is this something that's actually happening globally?
I think it's a global trend. What you find is out of the US, the SEC expects that an audit partner who's signing out of New York on something happening at a mine in Bigita, right? They must sign off with having done adequate work, right? And these big firms are increasingly realizing that it's difficult to do that. So you'll find a number of big firms that have actually exited, not just Zimbabwe, but a number of other markets. It's predominantly a risk management issue. Zimbabwe, when we talk about IAS 29 issues, it becomes a contentious point, and numbers coming out.
Audit partner in New York is not willing to take that risk.
Yes. So it's a global trend. I don't think it's just happened in Zimbabwe.
Okay.
It's actually happened across the globe.
Yeah.
Yeah, no, look, we must definitely spend more time with you. You should come through to the studio one of these Fridays, and we get into the weeds of many of these issues, which are fascinating to me and Tinashe, and I suspect many in our audience. Yeah, thank you so much for doing this, Lois, thank you for having me.
I really enjoyed it.
Yeah.
Thank you.
Cheers.